Hello everyone, welcome to this property market update for Townsville. Good old Townsville, rocky old Townsville, Brownsville. Now look, this market update is for the January month of 2024. It's been a very popular marketplace, I believe, across the country. It's been up for discussion by a lot of property experts, a lot of buyers agents actually are across the country. A lot of DIY investors generally have Townsville on their list of potential places to invest. So I thought I'd jump in and give everyone an update that's maybe interested in buying in this marketplace. You know what's going on there. So look, I'm super excited to do this one, guys. I haven't done a market update on Townsville for I think the best part of 18 months now. So the last time I looked at this market was quite some time ago, and a lot's changed since then. So I'm really keen to dive in and really break down what's been happening of late in Townsville. So I think if you are an investor or you are a home buyer, stick around. I won't keep you too long. I'll try and get through all of this in roughly half an hour, breaking down all of the data, and hopefully at the end of it you can get some insight and understanding about what to do in Townsville and what's going on, and then go out and make a well-informed decision when you buy. Anyway, guys, super excited. Stick around. Let's go. So before we dive in, guys, I just want to give a quick plug to the business. So my name is Troy Simbassini. I'm the owner of Tropical Life Buyers Agency, and I'm also the head of research. And yeah, we buy a lot of property in Townsville for clients, generally investors. We occasionally help the struggling home buyers navigate the marketplace. But yeah, we buy a lot of assets in Townsville for investors. If you feel as though you're someone that might need help, or you're just sort of reluctant to not move forward here, you've got some doubts around suburb selection, around street selection, around asset selection, reach out. More than happy to have an initial conversation to see if we might be able to add value to your investment journey or home buying journey. You can find us online on this website. There's our number as well. Visit us on Facebook. Check out our socials as well. All right. So for those that follow my market updates, know that I follow a very data-driven process where I break down basically the marketplace from a demand and supply point of view. So if we looked at these different data points, they're basically different metrics on the supply side and different metrics on the demand side. So first and foremost, we're going to touch on what's happening on the median house price front. Is it going up? Is it plateauing? Is it going backwards over the last 3 months and over the last 12 months? We're really going to look at that associated trend. So if you are an investor, I think you're going to get some good insight there. What's happening in terms of price movement in the marketplace of Townsville. We're going to look at some of the supply side metrics like stock on market, listing volumes, inventory, etc., to see what's happening on the supply side front. In Townsville, is supply rising? Is supply contracting? What's going on there from that point of view? We're going to look at these three demand side metrics here around days on market, how fast are properties selling for in Townsville, online search interest rates, how many people are actually interested or looking or searching in the marketplace of Townsville. It's a really good data metric to look at to see what might be happening on the demand front. We're going to have a look at the overall absorption rate. So based on the amount of listings that are happening in the marketplace, how much of a percentage of those listings are selling, which results in the absorption rate. So we're going to have a look at that. Going to have a look at the rental data as well. So if you're looking to invest, I think this is really good insight around what the vacancy rate trends look like. What's this vacancy rates going up? Is it going down? What's happening with the median rents? Is it going up? Is it going down? So we're going to look at the data and the associated trends there and give you some insight about that. And look, towards the end, we'll summarize all sort of the key takeaways from the market update, and then give you some potential tips to navigate the marketplace. All right, guys, let's dive in. Super excited. Okay, the median house price for Townsville, what's been happening? Let's have a look. The Townsville typical house price currently sits at $450,000 in January 2024. Over the last 3 months, it's grown 0.8% or $5,000. And year on year, it's up 5.6% from $426,000. So if we looked at it, guys, like the market is still going up here. The best part of a $5,000 increase over the last 3 months. So that just goes to show that over the course of a 12-month period, the last 3 months, it hasn't lost any steam there towards the back end of 2023. So the market is still very much on an upward trajectory here by the looks of it. up 5.6 on a year-on-year basis from 426,000 now to 450,000. Prices are certainly rising here, so that's what the difference between 550 to 426. I'm a bit dyslexic sometimes, or about $24,000. So if you got in 12 months ago, you're probably in a equity position upwards of $24,000 already if you bought, let's say, your 4-bedroom, 2-bathroom property for around that $450,000 price point potentially. So it is a market that's rising, guys, and that's a great thing for Townsville. It's had a number of rough years. Obviously I've bought a lot of property in the marketplace, so I saw firsthand, what's been happening there over the years. So it's really good to see the market, really surging along now and going through a really good growth cycle. I suppose that one of the key points that I wanted to make in relation to this sort of median house price is when you compare Townsville, the median house price, compared to some of the other regional Queensland hubs like Cairns, like Mackay, like Rocky, like Bundaberg, Toowoomba, Hervey Bay, like Townsville is the biggest of all of those different regional hubs. However, on the median house price front, I think out of that list, they'd probably be ranked number 4. So Townsville certainly underperformed from a market point of view. Like its sheer size, has underperformed. It is the biggest regional hub in Queensland outside of the Gold Coast and the Sunshine Coast. So it's certainly underperformed because the median house price of Toowoomba is like well over 600,000. The median house price of Cairns is like well over 550. I believe Mackay is around that 480 mark. Rocky is sort of around that 420, so it's in front of Rocky. Bundy's around that, early 500s, and Hervey Bay is in the 6s. So Townsville has very much underperformed, and that's also why I really like Townsville. I see some really good value for investors to come into this marketplace, because I think Townsville now has to really, find its true and rightful place on that list and try and work its way up to number 1. So I think it has a lot of wiggle room to catch up to the Toowoomba's, catch up to the Bundabergs, catch up to the Mackays and the Kansas over the next few years, in fact. So super exciting for Townsville. I think it has a lot of upside potential, a lot of wiggle room with that median house price to surge on, providing there is economic stability in the area and some really good certainty going forward for buyers and sellers. I think that will really underpin the trajectory of that median house price going forward. So that's an interesting one, guys, that comparable to other regional hubs, and it has an affordable place to buy in when compared to those areas. Townsville as well has had a bit of a shift, I believe, overall. It's now becoming one of those sort of lifestyle destinations, a really big sort of tourism hotspot now. So I believe that's certainly going to be playing a role in pushing up this median house price, over the next 10 years, I believe, as more and more people move into this area for affordability, lifestyle. A lot of tourists that come in and experience Townsville may eventually go, "Ooh, I like Townsville. I'm going to, look at moving there." So I think that's really something that's changed in Townsville over the last few years, and I think that's certainly going to have an impact on property prices going forward. Lastly, I just wanted to say that, in terms of, what's likely to happen in the future, as I said, like no one has a crystal ball, but as I said, providing there's no economic shocks, providing that, demand and sellers and buyers have good economic certainty going forward, I think that, median house price will certainly surge along, but there's no guarantees of that, obviously, guys. Take that with a grain of salt. No one has a crystal ball around what that's likely to do. But all I know is that when you compare it to other regional hubs, it's good value, and the economy is surging along now and in a really good position to really push up that median house price. All right. So we're going to have a look at the supply side data now and what's happening in Townsville on the supply front. But just before I do, if we circle back, so that median house price, we've just looked at that, and that's gone up, right? So the last 3 months it's rising, year on year it's rising. So supply has a big impact on the median house price movements. When you boil things down to supply and demand, if supply is generally low and demand is outstripping that supply, that can be the thing that causes a median house price to go up. So it's going to be very interesting as we dive in and look at this data to see if there is a correlation with stock levels going down and prices going up as a result. Hey, let's have a look and dive into that now. So stock levels are sitting at 0.3%, which means that there were approximately 239 houses currently listed for sale in January 2024. Listing volume appears to be getting lower over the last 6 months. All right, so we can see here this is a graph and it goes way back to 2020. But really what we're looking at here is this point in time here where the red circle is, and that is January 2024, and we can see here 0.3, 239 listings. But if we actually go back and follow that black line, let's say back 6 months, we can actually see that listing volumes have really started to go down in Townsville actually. So back in, I would say, around June, July of 2023, listing volumes sat at around 400 listings per month, and that was basically the average, I'd say, going back right till 2022, and then before 2022, or no, even actually during 2022, so even most parts of 22, listing volumes actually jumped above 400, moving into like the 500 properties per month. So since the best part of 2021, it started from 500 and it started to trend down into the 400s, then it started to trend down into the 300s, and now it's down into the 230 mark, and it's almost at an all-time low now over the last few years. So supply levels have been really going down, guys, and we've seen that median house price start to jump. So that's very interesting, guys, to see that supply is reducing in this marketplace, and we've had a look at that median house price, and then that's starting to go up. Obviously, there are different things that play a role in the supply side data and why that goes up and goes down. Obviously, when there is not a lot of new supply, like new construction, house and land packages, when that new supply isn't coming onto the marketplace at a fast enough velocity, that can start to really drag down, let's say, the amount of properties that are up for sale each month. So we've obviously been in a construction crisis over the last few years, so that's certainly playing a role in, I think, the amount of new dwellings that are being sold and constructed in the Townsville marketplace. So we haven't had a lot of that new supply injected. But as markets also start to become hot and heated, a lot of people, what I find anyway, is that locals, they start to then sit on their properties, so they don't really consider selling when they know the market is hot, because if they try to buy back into the marketplace, they're paying a premium to get back in. Or even if they want to sell and then rent a property, if the vacancy rate trend in Townsville has been low, then what is there for them to rent, right? So sellers don't sell because there's no real option for them to buy a new house or buy an existing house, because that's too pricey. They're going to buy a new house because there's not enough of those being constructed, and there's nowhere for them to go to rent because there's not a lot of rental dwellings available. So all of that can really impact what's happening on the supply side, and we really started to see that really go down and trend downwards over the last few years, and Townsville almost down to a point now where it's at an all-time low. So very interesting, guys, what's happening on the supply side. All right, so we've just looked at the listing volumes, and that's one of the supply side metrics we like to look at. And the second supply side metric we like to look at is the inventory levels. And for those who aren't familiar with it, basically there is a difference between listing volumes and inventory. The easiest way to explain it is listing volumes is basically these are the properties that come online for sale each month, and inventory is these are the amount of properties available for purchase at any given month. So there is always a difference between the listing number and the inventory number, because if you think about it, let's say in Townsville 50 properties come online for sale in 1 month, but only 40 of those properties sell, so that means that there's 10 properties remaining that roll over to the next month, and that becomes the inventory pool, the rolling inventory pool. And then the next month 50 properties come on, so that means that there's 60 in total for sale. So that's all basically inventory speaks to. So we have here the current inventory levels in Townsville currently sit at 0.7, with the marketplace showing significant contraction over the last 12 months. So what 1.7 means is basically on this scale here, this is the amount of inventory in the form of months. So how long would it take in the form of months for the amount of properties that are available for purchase to eventually be completely liquidated? So if the market, let's say, became redundant tomorrow in Townsville and there wasn't, any more new listings in the month of February, then the properties will be cleared out in 0.7 months, which is basically that's 2 to 3 weeks. So yeah, Townsville is as a marketplace where that current inventory levels are very, very low. And look, if you are someone that's an investor, we really like to see graphs like this when you're looking at marketplaces to invest, because that just shows a coiling and a contraction of basically properties getting tighter, the amount of properties for purchase getting smaller and smaller, and that inventory pool tightening and contracting over time, which basically means that over a period of time, more properties are being purchased far greater than the amount of properties that are coming online. So properties are being purchased greater than the listing volume. So that pool of inventory starts to get tighter and tighter because demand is always greater than supply each month. So that pool of properties gets smaller and smaller. And it started really high, up around that 2 month mark, where the market will take around 2 months to clear out, now down to only a couple of weeks, guys. So yeah, Townsville is a market where supply is extremely tight, and by the looks of this graph, we might have a market here where demand is really outstripping that supply, and the market is really coiled over time here as a result. So really good signs, guys. Again, if you are investing, this is what you want to see: supply at a fundamental level has over time gotten smaller and smaller, and at a point now where it's almost at a 3-year low. So that supply, and if that supply is at a 3-year low and it's being met with very strong demand, then that can certainly start to put upward pressure on house prices, because when you have a lot of demand and low supply, that means that a lot of the properties that are going to market, you're in a situation where you're potentially bidding against other parties, multiple offer situation. When you're in multi-offer situation, often the best and final offers are presented, and you generally have to offer over list price, or offers over the list price, in order to get that property. And when you have that done at such scale, where people are offering $10,000, $20,000, $30,000 over the list price to get that property under a multiple offer situation, then that pushes up that median house price. So yeah, very interesting what's happening there on the supply front in Townsville. Okay, so we've looked at the two supply side metrics in listing volumes and inventory, and we've established that things are pretty grim on that side. Those listing volumes have really gone down over the last couple of years, and so has the inventory levels, down to a point now where it's almost at a 3-year low. And we need to know what's causing that, and demand is the other side of the equation. So we'll look at the demand side data now to really gauge what's happening on the demand front. And the day on market metric, as well as the vendor discounting metric on this slide, really speaks to us understanding what's happening on the demand side. So all basically days on market refers to is how long is a property sitting on the marketplace before it sells, and that equates to a certain day or a number or figure. And obviously the lower the day on market figure means the faster things are turning over. So it could mean a very busy and highly contested market. If the day on market number is higher, that means that things are turning over at a bit more of a slower rate, so maybe demand isn't as high. And in terms of vendor discounting, all that speaks to is for the properties that are online for sale or on the market for sale, what are they discounting for in order to be sold? At what percentage are they discounting for in order to be sold, if they are discounting at all? And obviously the higher the percentage means that properties are selling well below list price, and the lower percentage means that things are selling around list price or slightly under. All right, now let's dive in and take a look at this data. So we can see here that Townsville January days on market currently sits slightly up actually from a long downward trend. And from terms of vendor discounting, we've seen a spike in vendor discounting currently sitting at 2.8% in January. So this is interesting. So let's just have a look at, I'm just going to ignore this circle here and this 40 days. So sitting currently at 40 days in January 2024 that's how long properties are selling for at the moment. And the vendor discounting rate currently sitting at around 2.8%. And if you actually look at that, it has actually bucked the trend. So the 40 days on market is up from the last sort of 6 months, and so is that vendor discounting figure here, which is this black dot, is also up from the last 6 months. So look, I don't think I'm going to read too much into this because I know data can easily be skewed when it's aggregated. So if there was, let's say, a couple of sales over the last month or two that took a bit longer to sell, that could certainly skew that day on market figure from 30 up to 40, and even if a few properties did sell at a discount, could skew that metric here from around that 1% up to where it was here right now at around that 3%. My thinking around this, guys, is that over the Christmas period, so a lot of properties went under contract in December, but a lot of them never settled until like early on in the new year because obviously banks were closed, real estate offices were closed. So I think a lot of them had a longer settlement time frame, and that really dragged up the average days on market, I believe, in Townsville from where it probably should be here around that 30-day on market. And I believe like there would have been a few quick sales around that Christmas period as well, where a few people got a couple of good deals. Something might have went online for $450 and someone got it for $420 because there's not a lot of buyer competition at the time. A lot of people were on holidays, so people just sold really quickly and got really good deals. So I reckon that really pushed up that vendor discounting figure for January, and that also really pushed up that day on market figure, those longest settlements for Townsville. So I want to ignore that there, guys. I want to ignore January and really look at the last 6 months here, and even the last 12 months of what's really been happening in Townsville. If we start with the day on market, we can see here that going back to the start of 2022, most properties on average sat on the market for around 40 days, and then the trend started to go down and down to a point, just last year in December, to where it sat well below 30 days in terms of the average property sitting on the market for. And if you think about that, right, in Queensland, the average contract period is between 30 to 35 days. So that's basically, the amount of time it takes for a property transaction to take place and for buyer to become owner. And if you look at that, that basically means that most of the properties are going under contract really in the first 1 to 2 weeks, if the day on market average is around 30 days. So for the last 6 months, most properties that are coming online are moving very fast, going under contract within the first 1 to 2 weeks. Because if you think about it, someone gets it under contract within the first 7 days. That means that they have about 2 weeks to get through their finance clause, get 2 weeks to get through the billing and pest clause, and then they're settling 30 days after they've signed the contract. So things are changing hands very fast here, guys. Demand looks to be very high in Townsville, and look, I suppose that gives good insight right into the marketplace, because as a buyer, if you're an investor or home buyer, if you're not putting an offer on a property, within the first week of it being online, you could potentially be missing out because things are going under contract very fast. And in fact, there are a couple of properties that even I missed out on last week in Townsville, a couple of investment properties where they've literally been on the market for a day and they're already under contract. So a highly competitive environment here, guys, so you need to be very fast and swift. And if you're working a 9-to-5 job, jumping on realestate.com of an evening, you could potentially even be missing out if that property only went online that morning. Could be already under contract that afternoon. So you have to be quite diligent and fast and swift if you want to buy a property in Townsville at the moment. And by the looks of things, from a vendor discounting point of view, most properties, discounted on average around that 2% during the 2022 to 2023 period, and now vendor discounting is starting to really go down. So that means that most properties now are probably not selling for under list price. It's selling very close to list price or even above now, whereas 12 months ago, 18 months ago, you could potentially offer $10,000, $20,000 under the list price and get a deal. But now in a marketplace like Townsville, offering around list prices where you need to be or above to get a deal, because things aren't discounting at all in order to be sold. So I hope that's helped, guys, and gave you some good insight around what's happening on the demand side. Demand side metric number 2 we like to look at, guys, is the absorption rate. And for those who are unfamiliar with the absorption rate, what it is, it's very similar to its name. It's how many properties are being absorbed in the marketplace. So basically, we come up with a bit of a percentage here of out of all the listings that have come online during a particular time period, how many of those listings have sold, and that gives us a percentage. And obviously, the higher the percentage, the better the absorption rate. The lower the percentage, the poorer the absorption rate. So we can see here that Townsville overall is experiencing an extremely high absorption rate of 84% from November to January 2024. So November 2023 to January 24. So if we looked at the figures, we can see here that there's been a total of 761 listings during that period from November to January, and there's been a total of 646 sales, resulting in that 84% absorption rate. So look, guys, that's an extremely healthy marketplace there, where most properties that go online are being sold during that time period, that 3-month time period between November to January. Any marketplace really with an absorption rate above 70% is a healthy marketplace. Anything above 80% is an extremely busy marketplace where things are being bought up, chewed, and swallowed by buyers in the marketplace. So look, overall, that is a very positive thing. If you are an investor, a very positive number, gives you a lot of great confidence in Townsville that things are turning over, things are transacting. Sellers can go to market with great confidence, and there's an 80% chance that their property will be bought. At what price? If we look back at the vendor discounting around list price or above. So yeah, things are selling at a high rate in Townsville, and things are selling at a very good market rate as well, where things aren't really discounting as well if we looked at those demand side figures. So yeah, very interesting time for Townsville. I've never seen that absorption rate sit around 80% for about, be going back 7 years now, I think the last time I've seen it around this figure. So it's going through a really good cycle at the moment where demand is very strong here, guys. Okay, so we've looked at the median house price, we've looked at what's happening on the supply side, we've looked at what's happening on the demand side. Now let's have a look at what's happening on the rental side. So I know this might be an area of interest for investors as well, to really understand what's happening in the rental market. It's good to understand that before you potentially buy in this marketplace. So we can see here that vacancy rates currently sit at 1.3%, and that equates to only 163 vacancies currently available for rent in the marketplace of Townsville. And in terms of the trend, we can see here that the trend is actually flatlined for the last 7 months. So if you go to this red circle here, we can see here that it's a 1.3% vacancy rate with 163 vacancies, and if you follow that black line back, you can certainly see that it's flatlined over the last few months, 7 months. Very interesting, guys. So Townsville has a population base of about 200,000 people. To only have around 160 properties available for rent at any given time in the marketplace is very low, relative to that population base, I think. And it's a very healthy vacancy rate number, I believe, for a big regional hub. If you compare that to most of the other big regional hubs, I think Cairns' vacancy rate sits under 1%. I believe Mackay sits under 1%. Rocky's around that 1%, 1.2, I believe. Bundaberg around that 1% or even slightly under, Harvey Bay 1%, and Toowoomba under 1%. So Townsville is very much on par with a lot of the other big regional hubs as well. And I think when you start to even drill down into individual suburbs, so if you are investing, drill down individual suburbs, you'll find that there'll even be a variance in the vacancy rates for individual suburbs. So there'll be certain suburbs with vacancy rate lower than 1%, where there's on average have had a very low listing velocity of properties for rent in that suburb, and then with some with maybe slightly higher than that 1.3, where there's been a lot of sort of rental stock available for rent. So my advice would be there, if you are investing, go in and look at things on a suburb at a suburb level to really see what those vacancy rates look like, as opposed to, I suppose, looking at it at an aggregate level. But it's good to know that at an aggregate level, at least it's ticking that box when compared to the other regional markets. But at a suburb level, I think diving in and looking at that will give you further insight as to what that individual suburb looks like from a vacancy rate point of view, so you can determine whether or not it's worthwhile investing there, whether or not whether the property that you might buy has a lot of competition, and you might not be getting premium rent for your property. So look, guys, really good, I suppose, healthy vacancy rate for Townsville. Again, when compared to the other regional markets across Queensland, it's very much on par. But again, my advice to investors is dive in and look at each suburb on a case-by-case basis. Let's have a look at what's happening in terms of median rent in Townsville. So this is one of the other sort of rental data we like to look at. So the median rent for Townsville currently sits at $443 per week. This represents a $32 increase on a year-on-year basis from $411 this time last year, so January 2023. $32, guys. It's went up over the last 12 months. This is a very good, healthy increase, right? Particularly if you're an investor. Not really necessarily good for tenants in the marketplace. I feel sorry for all the tenants that paying the extra $30 a week. However, from a yields point of view, to see that median rent increase that much over a 12-month period, it only makes those yields more attractive in the marketplace. And it just goes to show the amount of pressure, rental pressure and heat that's in the rental market to keep pushing that up over a 12-month period. And look, if you looked at that 443, I think it's still very much affordable, even as a percentage of household incomes in certain parts of Townsville. Obviously, there's a lot of lower socioeconomic areas where that's sitting well above that 30% of household income, that rent per week. But there are many other suburbs where that $443 per week is well below 30% of the household income. So still a very much affordable rental market. And even I think when you compare that to the other big regional hubs like Cairns, I think they're above $500 per week. Mackay's just under 500. Rockies are around that $500 a week. Bundy's around that $550 per week, and so is Toowoomba and Harvey Bay. So Townsville even is still very affordable as a rental market compared to those other regional hubs, and I think it still has a bit to catch up to their median as well. So there's a lot of wiggle room for that median rent, I think, to grow. So I think those yields are quite juicy at the moment. I think they'll get more juicier over time. And similarly to the vacancy rates, I think if you dive in and look at things at an individual suburb, you'll find that there'll be many suburbs that are getting more than $443 a week. I know that because we've rented a couple of the properties for our clients over the last couple of weeks, where we've gotten close to $600 a week and around that $550 mark for the properties that we purchased. So jump in and look at each suburb on a case-by-case basis. I didn't mention it before on the previous slide when it comes to vacancy rates and the median rents. The only thing that I really believe that can slow down rents from growing and the vacancy rate from getting lower and lower is the market being injected with a lot of new supply. So if there's a whole lot of new construction where the market is flooded with, let's say, a whole bunch of new house and land packages, a whole bunch of townhouses, a whole bunch of apartments and units, that just creates more supply in the marketplace, more rental alternatives to, let's say, your standard 4-bedroom home. So that can certainly start to really plateau this this median rent and even drag it down if there is an overabundance or an oversupply of property. And in Townsville, look, house and land, there's still a bit of house and land happening out in the northern, the inner north, southern, the southern suburbs as well. But the velocity of them, like I know there's a couple of builders punching out a lot of new builds in about 6 to 8 weeks, but most of the turnkey stuff is still taking some time, and I can't really see that really having an impact on vacancy rates and new supply, and really withholding and dragging down this median, because there's not a lot of them coming on at a high level of supply velocity to have an impact. There is some smaller median density happening around the city and in sort of the inner fringe, like little small townhouse developments, units, duplexes, etc. But again, I really can't see any of those sort of developments being done at such a large scale where it moves the needle in terms of the vacancy rates and the median rent. So, yep, guys, juicy rental yields here, and I think there's plenty of wiggle room in this one to grow, and I really can't see anything impacting it in the short, medium term, that's for sure. So I was just speaking to, the new supply and how that could impact the median rents and how it could impact the vacancy rates. It can also impact house prices as well. So the median house price, new supply can impact it. And I've actually got some new supply data here, so we can actually look at what the pipeline for Townsville looks like. And we can see here that a total of 188 building approvals for the year to date, basically the current financial year, and it's actually trending low to previous years. So 188, and if you compare that here, this arrow points to previous years, like wow, it's at a 20-year low. So if you go way back to the year 2000, you can see here that building approvals sat well above 1,000, and then around that 2015 mark, things started to trend down, and then over the last couple of years, things started to trend down. And look, Townsville did go through a period there where there was an oversupply and vacancy rates were high and rents were low and prices didn't move. But you can see here that a lot of the supply in the marketplace had a lot to do with that. And if you track that back 10, 15 years, there was an oversupply of properties in the marketplace, certainly with these levels of approvals. And look, if you go back to the year 2000 here, the last 3 years, we can see here that the approvals were around 1,000, then it dropped down to probably around 800, 500, and now down to the best part of 118. So I think we're going to see a lot of this approvals come on the marketplace over the short term, over the 2024 period, 2025 period, 2026 period. But it's going to be pretty grim after that. So the medium and long term, if these approvals remain really low. So Townsville had a point where there was an oversupply, then it dipped, and then it was sort of plateaued a bit here, and now the last couple of years there was a few building approvals, and we're expecting that new supply to come onto the marketplace in the next 1 to 3 years, but then the next next 3 years to 5 years after that, it could be a marketplace that's very grim. So yeah, guys, interesting to see that new supply pipeline. I suppose that just goes to show that if you do buy in this marketplace, the long term, particularly the next 10 years, if the approval rate stays at around this 100 to 200 approvals each financial year, then that's very low numbers, and that means that the supply pipeline could be very, very grim. So something to keep an eye on there, guys, because if there is a whole lot of new supply in this marketplace, that could mean that median house price could slow down, and that could mean that vacancy rates could start to go up, and that could mean that median rents could start to trend down. So we actually want to see, particularly investors, this approval rates sitting really low relative to previous years, to give us certainty that Townsville is not going to be a market that are going to be oversupplied. And I know a lot of investors get turned off Townsville because when they look around Townsville, they see a lot of available land, and obviously, when you see a lot of available land, you think that's where a lot of new supply is going to come to the marketplace to be a threat to your property, create more competition. So this is something I think you can get some confidence out of seeing this data. Really sitting low here relative to previous years. So I hope that's helped, guys, looking at the supply pipeline for Townsville. Congratulations, guys, you made it all the way to the end of the presentation. Thank you for putting up with me for that long. No, look, I hope you really got some value out of what was covered in that market update. There's a bit of data there to look at. It can be quite comprehensive at times, and if you're unfamiliar with the data, it can be quite confronting. But I think looking at the data gives you really good insight, about the marketplace, and it allows you to then start to make calculated decisions and calculated diagnoses about what's going on in the marketplace, so you can then figure out a buying strategy to navigate it, or even if it's even worthwhile buying it in the first place, guys. So yeah, I hope you got some value out of that. But a couple of key takeaways, that I think has come from looking at that data there on the supply side, on the demand side, the median house price, new supply, etc. And these are my key takeaways here. So the median house price, you can see in Townsville that's still growing, and it has not retracted, despite headwinds. Headwinds such as interest rates were really plaguing the marketplace of late. High interest rates forced a lot of investors out of the marketplace, forced a lot of home buyers out of the marketplace. But despite those high interest rates, Townsville is still a market that's gone up by 5k over the last 3 months, and 24k over the last 12 months. And obviously there's a whole bunch of negative sentiment in the marketplace too, around the market crashing as well. So despite those headwinds, Townsville has certainly surged along. So that's a key takeaway there, guys. The market is still rising. In terms of supply, so we can see here that current stock levels are extremely low and don't appear to be sustaining demand levels. So we've seen the listing volumes go down over time, and we've seen that inventory pool really contract over time. And yeah, basically sums it up there that the supply in the marketplace is just not enough to cater for that demand. So the listing velocity goes down and the inventory pool goes down. So supply basically is very low in the marketplace of Townsville. On the demand front, demand is extremely high, with absorption rates very, very high, above that 80%, and the days on market very low, around that 30 days, and vendor discounting, sitting around that 1% as well. So all things on the demand side, in terms of the data, look very, very good, which suggests that Townsville is in a market where demand is outstripping supply at the moment. So from an investment point of view as well, that gives you great confidence that you can be coming into a market, buying at the right point in time, where you could get in and make some good gains potentially here, over the short term, with the long term fundamentals also looking good for Townsville. So supply and demand look good. New supply. So we looked at that new supply data, right? And we knew that if there is a whole bunch of new supply data, that can certainly have an impact on what happens to that median house price, if that goes up or down or plateaus. It can certainly have an impact on vacancy rates, whether that goes up or down or plateaus. Have an impact on median rents, whether that goes up or down or plateaus. And we've basically established that the financial year to date, those approvals, those building approvals, are looking pretty grim, relative to previous years, where it was all sort of sitting around that 1,000 approvals or more, and then going back 10, 20 years, sat well above 1,000 building approvals each year. Now it's down to the best part of 200 a year. So that just suggests that new supply is looking very grim going forward. So that's a good thing, particularly if you're investing in this market, because that that's not really going to have an impact on the median house price, not going to have an impact on vacancy rates, and it's not going to have an impact on median rent. So you're getting some good confidence and comfort out of looking at that new supply data. See those financial year to date approvals looking very grim. In terms of rents, vacancy rates extremely low, and it's very affordable relative to those other markets still. Median rent as well, very affordable, with a lot of wiggle room to grow relative to those other marketplaces. So vacancy rates low, healthy, median rents nice and juicy at the moment, with plenty of wiggle room. And again, my advice is make sure you dig down deeper into those individual suburbs as well, because a lot of those suburbs where the median rent sits well above the Townsville median. Yeah, guys, and basically to summarize, Townsville is a seller's market. So if you are a buyer, it's going to be quite challenging for you as a buyer to navigate the marketplace. So you need to, go in with, guns blazing and really put your best foot forward in a seller's market. And it requires, a lot of diligence. It requires a lot of discipline, and requires, a very swift and approach when you're trying to navigate a seller's market, guys. So it is a seller's market. And if you're a buyer, make sure you get all your ducks in a row before you go out there and put your best foot forward. But good luck with it all, guys, and thank you for tuning in. Oh, sorry, guys, I forgot to add one more thing here. I forgot to finish on this. I'll finish on this slide here, and this is basically my top 10 tips for navigating a sales market. So you as a buyer, I think these tips might certainly help you with getting a deal done in this marketplace. Otherwise, if you feel as though you might need some help, feel free to reach out to me and the team. More than happy to have a chat with you as well to see if we might be able to help you buy in the marketplace. We get a lot of pre and off market deals. We can find you the better quality assets in the marketplace. So feel free to reach out to me. Otherwise, take these 10 tips and use them to really put your best foot forward in the marketplace. So number one is, I think you got to have your finances sorted before you go and buy. So have a pre-approval in place, or have your cash ready to go. I don't think agents will take you pretty seriously if they know you're not financially ready to go. So that's number one, guys, most important. I think here you're going to be swift and think terms too. So in a marketplace where things are moving fast and it's a highly competitive environment where things are selling at list price or above, you need to be very fast. So, as I said, the day on market trend is around 30 days. So most things are going under offer within the first week or so. So you need to be quite swift there with your offer process, and swift in getting visibility of property and acting on them fast. But in an environment where things are selling above list price or around list price, I think it's an opportunity for you to even start thinking terms as well. So if you can come up with juicy terms that I think would align well, I think if you have a good price and good terms, then you're in a really good position there to get deals done. So don't discount the terms at all. I think really try and understand the vendor's situation and try and massage the terms around that aligns to their situation. I think this sort of plays a lot to what I just said there. Understand your logistics and what you're willing to compromise on. So in a marketplace where a lot of the transaction is skewed in the favor of the seller, you need to really understand your situation and logistics and what you can and can't do, and you have to be willing to make compromises as well. So when I say understand your logistics, if you're someone that's buying from Sydney or Melbourne and you're buying in this marketplace to live there and move into the marketplace eventually, but your offer is subject to the sale of your property in Sydney or Melbourne happening, then you need to be aware of what those logistics look like. So how long will it take for your property to sell and settle down there, and then really sort of build that out and what that looks like before you put in an offer on something up here. So you need to understand that otherwise, and be clear on that. Otherwise, it's going to be very hard to articulate, your offer to an agent if you don't really understand, what your situation looks like. And I think you've got to be willing to compromise as well. So if you can't compromise on terms, you need to compromise on price or vice versa. So in a market like this, you have to be willing to compromise, I think. Number four, follow the price trend. So things are, we looked at the last, the 3-month price trend, and the price has grown by 0.8% across Townsville, and what that equated to about $5,000. So if you haven't been following the price trend, you could be going into transactions, offering, below list price or under list price or well over, what the property might be worth and overpaying. So if you're not keeping an eye on the price trends in the marketplace, you could be, overpaying, or you could be underpaying, which, either or is not a good thing for you as a buyer. So my advice to people is that a lot of the data that is online around properties that are previously sold is quite lagging as well. So often, like let's say if a property is sold last month in December for 450,000 and there's another property on the same street, that doesn't mean that you should offer 450,000. More likely that property now is selling for 455,000 or 460,000 as opposed to 450,000, because that's now lagging data, and the agents are actually then using that as their price comparable to price their new property from. So in a fast-moving market like that, they're going to price things on previous sales, but they're always going to expect to get more than what the property sold previously, particularly those properties that are very comparable in nature. So follow those price trends, guys, and they're changing each week for sure. In Townsville, follow the agents. I say, like, if you just if you're looking at a particular suburb or at a particular price point, look at who the agents are that are selling it in that suburb. So if you find that certain agents are selling in Burdell, or some agents are specialists in Mount Low, some agents are specialists in Bushland Beach, then that they could be the agent that you could potentially haggle with and talk to around what they might have in the pipeline, or you could expect them to potentially have your next deal. So I'd be really watching and following those agents that sell a lot of the properties that you like in the suburb that you like, because more often than not, they're going to be the ones that are going to be selling the property that you might buy in the future. So follow their movements, follow them on social media and things like that, because you get sneak peeks around what they might have in the pipeline as well. Build relationships. So if you follow those agents and establish that they're the ones that are selling the properties in the suburbs that you want to buy in, I'd be building those relationships. I'll be getting on the phone, saying who you are, what your situation is, and what you're looking to buy, and touching base with them at least once a week to remind them that you're still an active buyer in the marketplace, and build those relationships, because you never know, you could be in a situation where they start to present you some pre and off market deals because you've been quite consistent with your approach. So build those relationships, guys. My advice here is establish a network before you go and put an offer. So get a building and pest inspector already selected and ready, and then sort of prompt them to say, hey, I'm looking to buy in this suburb. When I get someone under contract, you're going to be the first person I call. So they're expecting you to call, and they'll have bandwidth to do the inspection within the period of the contract that you suggested, whether it's 14 days or 17 days or 7 days. And same with your conveyancing team. Get your conveyancing team ready prior to purchase as well. So if something comes up, that might be a red flag in the contract, you can get them to quickly look over things very fast, and you could sign the contract, on the same day, as opposed to wait 1 or 2 days. And by then, there might be other buyers interested in the property and can come in and get some to you. So have those networks ready to go, and I've always got my network ready to go before we buy when we work with our clients. There's plenty of free resources that allow you to get valuations on property, free resources that gives you property due diligence information. So use as many of those free resources as possible to get as much insight about the property and the marketplace as possible before you go and buy. So you make sure you're buying, if you're an investor, good quality assets in the marketplace, and if you're buying in general, just make sure you're getting a fair price and good value. So use a lot of the free resources that are out there as well. I'll put a couple of links in the show notes, so you can jump on and use those resources that me and my team use as well, the free ones. So good luck with that. Ask a lot of questions, guys, and I think it's very important in a seller's market to get as much context around the selling party and their situation, their motivations, so you can start to massage and structure deals that might be favorable in that instance. You're not sort of finding a deal and just sort of putting in offers willy-nilly. No, you're actually talking to the agents, gauging as much information about the vendor and their situation, and much information about sales, what it might sell for, get as much price context, so you can be on point every time you put in an offer, and you're not throwing a dart at a dartboard with a blindfold on. You're very calculated in what you're doing. So the only way you can become calculated is by gaining enough information to then structure and massage your deal in a way that could potentially work. And lastly, guys, look, in a seller's market, lowball offers won't work. So I think it's not a market where you go in and be offering $10,000, $20,000, $30,000 under that list price, because I think you'd be laughed out the door, because you're just not in the market to do that. So these are my top 10 tips to navigate the Townsville sellers market. All the best with it, guys. As I said at the start, if you're still reluctant to buy, or you're having trouble buying in the marketplace, feel free to reach out to me and the team. I'm sure we'll be able to connect you up with a great asset and get you into the marketplace sooner rather than later. All right, guys, thank you for tuning in and all the best with everything.